Good morning, everybody. Happy Monday. It's February 26th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. Every Monday, Thursday morning, roughly about 8:30, 8:45, we come up with the daily bites and talk a little bit about the markets, the economy, Fed policy, what's happened the last couple of days, what's happening now, and what might be going on down the road. So here we are on February 26th, starting the last week of trading in the month of February. 4 more days left of trading. Of course, we have an extra day on Thursday, being a leap day. A little bit more about that in a few minutes. Leap day, of course, statistically, historically, has been a pretty strong trading day, actually, for markets. I think over the past 60 years, it's been up about 75% of the time. So something maybe we can look forward to an update on Thursday. But of course, we've got 3 days in front of that to manage as well too. So looks like futures are up a little bit this morning. S&P futures are up about 4 points, 4.25. NASDAQ up about 30 or so. Dow is creeping up a little bit, about 17 points here. When futures opened last night, I noticed that there was a little bit of softness there. The traders had encountered some selling early on, but that seemed to be flushed out overnight, and the markets have rallied up here. Bonds are up, which means yields are down. We see crude oil was down a little bit earlier. It's now about flat, about $76 a barrel. Gold down a little bit here, about $5 or something like that. So it's very good, very possible here that we're going to see a continuation of the end of last week's rally. And of course, Friday started off as a pretty strong day, but lost some steam as the day wore on, and we closed slightly down. S&P 500 closed on Friday at 5088.8. It was trading above 5100, but just couldn't hold it at the end of the day. We'll see if we can get a push back above 5100. I think it closed this week above 5100, maybe 5120 or something like that, would be a huge positive moving into the new month of March. Of course, the new month starts on Friday, and we often see a lot of money flows coming in at the beginning of the month. But the problem is that March is generally a down month historically. The statistics bear out that March is probably one of the worst months of the calendar year, along with September. It makes a little bit of sense too, right? Because as we go into tax season, of course, a lot of people have to pay their taxes, do a little bit of selling here and there to pay those taxes at the by the middle of April. So we may see a little bit of volatility over there. And in addition, we have moved into phase 3 of earnings season from the first quarter. What is phase 3? It means that some very important earnings reports are going to be coming out in the next couple of weeks, but there are fewer of them. Now this week, interestingly enough, is a pretty heavy week, heavy dose of earnings coming out. Not all S&P 500 names, but we do have Salesforce. We have Workday later on today. This morning we had Domino's, which was a good trade for us in the chat room. I'll share that with you in just a moment. And then also later on in the week, we'll have TJ Maxx, Best Buy, DELL, Devon, Baidu, Advanced Auto Parts, AutoZone later on this week as well too, tomorrow morning. So some big names that are going to help move markets during the week. I just mentioned to you Domino's DPZ, and listen, I'm going to tell you right now, if you were in the chat room last week, you had a chance to get on board. Now, I don't share a lot of my trading ideas out for free, out on social media, out on Twitter. Sometimes I do, not always, but some of the better, really best ideas I share with the chat room, and I also share with the EOS service. But if you're on Twitter just waiting for something to drop, you're taking a risk, right? So what happened last week? I'll show you this right here. You can see here, posted on February 23rd. That's Friday. At 11:54 in the morning, added some DPZ April 460 calls at $9.40. So as you can see, and of course those were out of the money when we bought them, but had big premium. And as you can see here, the stock came out with good earnings this morning, and is ticking up $28. So these calls are going to be worth some nice coin. at the open. So we'll see what happens. I'm not sure what I'm going to do yet. I'm inclined to roll them up, but we'll see what happens today. I'm not going to make a commitment either way, but we'll see. But the point here is this: is that if you're not in the chat room, my question to you is why not? And you could have looked at this trade, just bought one contract for $9.40. Would cost you $940. I think these are going to double today, right in the open. So you would have made almost instantly $1,000 just for one contract of risk for this particular name. So, I'm going to lay it out there. You make the choice. You make the decision. You want to come join us in the chat room and see these kind of trades, and not only the trading, but also the good camaraderie with people in the chat room. You're going to learn a lot of stuff about trading, about options, about markets. I do a lot of teaching in the room as well too, when there's a little bit of a downtime. So here's a perfect opportunity for you to step in here and join us. A little later on in the week, this is webinar week for us over here at Explosive Options. On Wednesday, I'm joining with Sam DeMarco, who is our primo excellente spread trader in our chat room. He also runs the service, the spread trader service. He's up almost 4.5% for 2024, which is great. Spread trading product, if he does about 2% a month, he is on pace to do 24% for a little amount of risk. We'll talk about risk on Wednesday, but basically the webinar is a continuation from the one from January 31st, where we're going to be talking about how to manage risk by using spread trading. So it's an important webinar. I don't want you to miss it. It's at 4:30 after the close on Wednesday. So, and then on Thursday, we return with the highly popular, very, very popular Leaps webinar. And why are we doing it on Thursday? Because Thursday is Leap Day, February 29th. So I normally have this webinar either in late January, early February, but I pushed it off to this day because I wanted to kind of be in sync with Leap Day in 2024. So we're going to be talking about leaps. I'm going to be explaining about what those are. We're going to put some trade ideas together for 2024. We're going to review the trades from 2023. Sam's going to join me again on this webinar, and he's going to set up some diagonal spreads for us in the Leaps webinar too. So don't miss that one. It's very, very popular. It's probably the most attended webinar that I do every single year, and it has been for about 10 years. So don't miss this. Don't miss this webinar. It's an important one for you to learn about leaps and to also get some ideas to put some trades on. So as we're moving forward here, we see some positives here in some of these names. Of course, Broadcom, NVIDIA is ticking up today. We see Amazon making a nice move, probably to a new all-time high, 176 here. Microsoft, Google's down a little bit here. So some of these names, big names on the board, are kind of mixed here. Booking's making a little bit of a comeback here, up about 1%. I like Palo Alto, which is a name that we entered a little bit more of last week. Leanne in our chat room and also Nicolette were looking at this name and added it much earlier, and they're doing pretty well with this name. Some biotech names are up this morning, and we're seeing it looks like an upgrade on Micron, MU. Some positives actually sent on statements were made from the CEO from Taiwan Semi overnight as well, from the founder actually. And so what, we'll see how things go today. It could be an interesting trading day here. Always keep some cash available. Have some protection on just in case, right? Always have some puts on. For me, it helps me be a stronger buyer if I want to be in calls by having some of that protection on. And I know that sounds kind of counterintuitive here. Why does it feel better to put more risk on when I have puts on and I'm losing money there? That's not the point. The point is that I have that protection on just in case the markets do break down. And if they don't break down, then the win on my calls should more than override or offset the losses that I have in the puts, right? So let's take a look at a couple of charts here real quick before we break. The 10-year yield. This is one that I was looking at this week. We tagged the 100-day moving average, which is the gold line over here. last week, and can't seem to get above there. And bonds are up today, so it means yields are down, right? So we may be coming back down here. I think the support level on 10-year comes in at about 4.15 or so, which is the 20-day moving average. And actually the 200-day moving average. So if any break of that level, we see bonds take off. We're probably going to make a run down towards 4%. Probably going to have to be a huge drop in yield to get that move, because you can see certainly by looking at this chart here, yields are in a moderate uptrend here, which means that bonds are in a downtrend. Far as the breadth is concerned, let's take a look. We haven't looked at this one in a while. We usually look at the NYHL, which is the New York Stock Exchange High-Low Index, but we'll take a look at the NASDAQ, right? So NASDAQ over here has made some really nice prints here. You know what? I'm gonna change this from candlesticks to a solid thick line here, and you'll see what I'm talking about. It makes a big difference here, right? So we can see that these prints above 0 are where we want to be, right? So let's put a line over here, right at 0. So anything above there is a healthy print that we want to see. So we see healthy prints above 0, and we had one at 147 on Friday, so certainly bullish for the NASDAQ. Some people are wondering, well, you know what? How much further can the NASDAQ go? It's gone up a lot already this year, and it was up a lot, over 50% in 2023. Can it keep going? Well, as long as these prints are strong like this, breadth is good, then the markets can continue to go higher, right? There's no magic there. It's just it's math, and it's simple understanding of momentum and sentiment and where money flows are going. And you know what? We're not trying to establish a thesis here of our own and try and make other people buy into it. We have to pay attention to what the market is doing and come up with an idea about what is happening around the markets, and then come up with an analysis and an action play, right? So markets are going to continue to go higher as long as these prints are above 0. And so let's take a look at the S&P 500 chart here. So we had a big move down last week, but the markets bounced back sharply off that 20-day moving average. See that here? Let me open that up a little bit for you. You can see this dotted line over here, 20-day moving average. So so Wednesday or Tuesday, big drop, testing of that 20-day moving average on Wednesday, and then a big huge gap up on Thursday and holding on Friday. So if we continue to make higher highs and higher lows, that is a textbook definition of an uptrend, right? Again, we're not trying to define things in our own terms or our own thesis, rather just interpreting what the market is doing and going with it. So when you're in a textbook uptrend, what do? You buy the dips, right? And that's certainly probably what happened on Wednesday. So we think going forward that at least higher highs and higher lows, the market can continue to go higher. All right. So I think that's going to be it. A couple of names that I was looking at this week. Of course, we have earnings coming out later this week, which is tomorrow morning on Lowe's, which is a name that I like here. You can see that it broke out slightly above that September high here. We've got a beautiful pattern here of an inverse head and shoulders pattern. The left shoulder here, head here, right shoulder here, and we're broken out above that. This one over here, all right, this is a huge, big inverse head and shoulders, right? So this measures, oh gosh, probably about 50 points, right? So what are we talking about? We're stock's at 232 right now. This could stretch out to 285. 285 on the lows. So I'm very excited about this one. It looks much better than Home Depot right now. Although Home Depot pulled down after earnings last time out and rallied right back up again, so it's in a nice uptrend as well too. But this one right here, this one's got some legs to it. Certainly, if the earnings are poor tomorrow morning or they cut guidance or something like that, then the pattern is destroyed. But as it is right now, as I'm seeing it on Monday morning, this is something I can get very interested in, and I already have some calls on this one. Later on this week, we're going to hear from Salesforce, of course, and DELL, which is a name that I've been very, very high on lately. We have a lot of calls on DELL. We had a huge day on Thursday, a follow-through day on Friday. You see a little bit of a shooting star here on Friday, which is generally negative. But as long as this low holds from Friday, then I think that the stock's got some more legs here. I think the stock's going to make a run to 100 eventually over the next several weeks. And then later on today, we're going to have earnings from Workday, WDAY. This is the name that I also have. Again, another stock that's in the data area, cloud area. It's got a series of higher highs and higher lows. Again, another textbook pattern of an uptrend, right? A definition of an uptrend here. So, you just buy the dips. And of course, that's what happened on Wednesday. It happened the prior week and the prior week before that. So every single time it dips to the 20-day moving average, goes up. So I have some calls out here. Of course, after today's earnings, we're going to know a little bit more about the pattern of the chart here, because the stock hasn't had earnings since November. And of course, you see, when was that last earnings? It was towards the end of November, right near Thanksgiving, and the stock just exploded upwards, right? Now, I've noticed over my career, over my time watching earnings, a lot of these things come in threes, which means that good news comes in threes, bad news comes in threes. So this one would probably be one that the first one over here. So if we get good news coming out, it's going to come in threes. So the anticipation is that you're going to get another good earnings report and another good reaction on this stock later in the week. Again, it's not a guarantee here. This is just something I've observed over a period of time, and it's not 100% perfect. There is nothing out there in the technical analysis universe that is 100% perfect. You have to understand that. So if I follow something and I'm wrong, it's not, why did it fail? It's, oh, well, it didn't work this time. I'm moving on to the next one, right? And that's where we manage our risk and so forth like that. We've talked about that. We're going to have another webinar talk about managing risk in a couple months. So anyway, that's going to be it, everyone. I wish everybody a great trading day. Thank you very much for joining with me today on the Daily Bites. And I'll see you guys all back on Thursday, Leap Day, for the next Daily Bites. And of course, don't forget the webinars. They were out on social media, and Twitter, Facebook, LinkedIn, Threads, Instagram, you name it, everywhere on social media. For the sign-up link, it's on Zoom this time. We're doing a Zoom webinar on Wednesday and on Thursday. So come on in. It's free. It doesn't cost you anything, just your time. And hopefully you get a chance to learn something about spread trading and then about leaps on Thursday. So thanks, everyone. I appreciate everyone spending a little bit of time with me again this morning. And I'll see you guys all on Thursday. Take care. Have a great trading day. And if you're in the chat room, I'll see you a little bit later on today. Bye. Take to the streets, kill with